Hey traders, Nick Shaheen here, doing a fun little video to test our skills. This is more tailored towards traders than super long-term investors. But even for investors that go a year out, for example, or 6 months out, all this stuff applies. It's just basically use the charts as a consultant. You do your homework, fundamentally this and that, but then at the end, why not ask the charts? What do you think about timing? Is this an ideal time? Maybe start half, maybe wait out a couple of candles, couple of months, couple of weeks, couple of days. It's important. So this stuff is not rocket science. It repeats itself over and over. You can go and check out the videos I do. Time and again, they prove correct and usually keep people out of trouble. I certainly rely on the charts for everything. So the takeaway from this would be to either start looking into it or do some homework, do some research, or start noticing things, ask questions, reach out to me. At the end, there'll be a subscribe to this YouTube channel. It's free. Do it and set the reminder. Also, down below in the description, there will be some links to ways to learn some of this stuff, or at least reach out. All right, so this is Boeing. It's been in the news. Why not look at Boeing? I rewinded the action. This is the beginning of 2019 right here. So we're going to run through some time lapse. So I'm going to hit play and I'm going to try to stop it, pause it. So it had a good reaction to earnings back then in February. The stock rallied. This is where the emotions kick in. You go, oh my gosh, I'm missing out. Fear, FOMO, they call it. I got to buy it. I got to buy more. And then it goes through the roof and some people get stuck in the top. And then something happens. Whoosh. And in this case, I don't remember what, but we'll go back and see if we can figure it out. The stock fell. And fell apart hard. So probably had some headlines. So this is where you say to yourself, is this a place I panic? So this is the first question. So the charts are not only to see if it's a good time to buy, but what about a good time to sell or short? So this is what happened so far. It rallied way up there, fell apart. So is this where I start panicking and get out of my stock? So if I held the stock from here to here and I didn't sell yet, I'm going to ask you, if you held it, would you sell it down here? If you said yes, you made a mistake. If you said yes to start shorting right here, thought that would be a good time to start shorting because it would go lower, you also probably made a mistake. Well, let me put it this way. Let me rephrase. This is not something I would do. So let's hit play. I don't remember exactly what. I kind of remember the price action. Well, let's see here. So fell a little bit further, but not much. So if I was holding it long, I'm still okay. Well, okay in quotes. Okay after the debacle. Okay. So let's go back and say, all right, so why wouldn't I sell down here? Because that was the place from where they sprang, and it was a place where they fought over before and before and before and before and before-ish. So they have a habit of fighting over it. Plus, volume profile tells me that it's an area of support, but that's a long conversation. So using the same logic, I'm going to ask you, so is this a place where you start buying it? You see the gap, everybody says, gap's got to be filled. Do you buy it here? If you ask me if I buy it here, if my brother comes and said, hey, should I buy the stock right here? I say, you know what? I personally say, wait out a few candles. So whatever you said, you grade yourself. So let's see what happens. Oh, it's looking good if you bought it. Oh, what happened? Uh-oh. Okay. So why wouldn't I buy it here? Because that was a place they fell apart, and it's an accident scene, I call it, and it was a level from which they sprang. So it was a level of contention. So here it was resistance, one can argue, and here was failed support, one can argue. So it's a level of contention. And if I look left, it was about the same level where they failed big time here. So whoever fought hard here and here and here, they're going to fight it out again. And if they say that machines are doing a lot of the trading, well, guess what? Machines are programmed to do this and that at this and that level. So they're going to rinse and repeat, rinse and repeat. So here we go. Same question. Do I sell now or not? Do I panic now or not? So if I still held the stock and I enjoyed this bounce and I didn't get out, I was a little piggish. Usually I say that was a gift, thank you very much, knowing that this was going to be contentious. And then back to here. Let's say I didn't sell. So back to here. Am I comfortable like I was comfortable the first time? No. Same theory applies, but I'm not as comfortable. What I would do is I would set an alert. Anything lower than the last time, I'm out. Maybe here, maybe below this candle right there, just for good measure. And if I'm really brave, maybe below this candle right here. So it all depends on personal preference. Actually, this wouldn't be a bad place at 350 because that was a level of contention right here. I can see it. Same up here. So let's see what happens. I literally don't remember what happened. So let's see. Small bounce, big bounce. Maybe I need to speed this up a little bit. Okay, so they're still fighting, higher lows. Uh-oh, there we go. So this is where I would have gotten an alert. Triggered. The bail. So if I set my alerts here, I have to book my loss. If I set my alerts here, it pinged. Or here, it hasn't pinged yet. So it all depends. So let's see what happens here. So this was a headline stock. It had, so that would have been a good exit. So on the way up, whatever was levels that were holding tight, like this level here, then becomes resistance. So on the way up, do I restart longs? No, I don't restart longs. I don't care about it right now because it's going to go into resistance. So it's fighting. They're trying higher lows. They're trying, but then they go back towards the neckline. Uh-oh. So these are necklines that are lost. This is a neckline that is lost, so it carries lower. This is a neckline that was just lost, so it's going to carry lower. How far lower? I don't know, but I can tell you one thing, that this here should be solid support because that was the December test, Christmas test of 2018, and that was a tough test. So I know Boeing has specific news about it, so you know it could go there, and it's now playing around with this orange line. So this orange line is really sticky, and once they went over it, that was a good sign of confidence there. So back to here. Do I buy it here? Okay, you see this big candle. Oh, I want to do it. Do I buy it? Not me. I would want to see what happens above it. So I would put an alert. You can see I have an alert now, so I can tell you that in the future, I'm looking at that level again, so it comes back into play. So that's going to really highlight the fact that levels do matter more than anything else. Turn off the headlines and look at the levels, and I bet you would make better decisions. So here we go, fighting with the same level again. So now it looks like an inverse head and shoulders, cup and handle. All I care about that it's a neckline, and they're fighting over it. So bulls and bears are fighting, buy, sell, buy, sell, buy, sell. And if the buyers overcome the neckline higher, then they're going to overwhelm the sellers and go a lot higher. And that's why they tell you, cup and handle is bullish, and you go this much, you can calculate how much higher they're going to go. But they failed. And now they're fighting on the neckline below. So they're going from neckline to neckline. This is a neckline up here, neckline down here. So this is where I put the alert if I'm long. Hey, but so right here was exactly this one. So this is where the alert would have gone out, and a lot of people would see that and they say, no, one more tick, let me wait one more tick. And with headline stocks like that, one more tick could cost you big. So let's see what happened here. So the bulls did not have the oomph to get through their necklines. The bears did. So now the bears have the advantage, but the bulls are overcoming the necklines from below. So this should have been resistance, and it wasn't. They sliced right through it. So let's see what they're able to do on the upside. And now I'm not talking about headlines anywhere. I'm just guessing from the charts. Okay, so now I can tell you they're drawing out some sort of an inverse cup and handle. The bottom line is they want to test that neckline again. And it's not a hard line in the sand, it's a zone most often. So if you use a crayon like I do, not a fine point pencil, then whoop. All right, so here we go. A couple of big green candles. Somebody said something in the news, and now they're testing the last failure point. That's pretty important. And above it, those failure points, and above it, there's a little gap, another failure point, and that big gap that never failed from before. So let's see. Nope, rejected, and they're stuck. All right, inching back up. That's totally okay, as long as they start setting a reliable higher low trend. That's all good news. And then they backtrack. So far the buyers are still in charge by a hair. They're fighting. Oh, something happened. Okay, this is now we're in October, so probably the recent headlines of them not doing anything until next year or whatever. So the buyers could not fill any of the gaps above. That's why hopium, I don't buy in anticipation. I should wait. I don't short in anticipation. I should wait for what? For confirmation of breakout of said necklines. All right. So I'm going to exit that and go back to yes. Okay, I'm going to reset the chart and let's see it in full. So this is in real time, and that's why I have the alert. You see that little orange dotted line? I set it as an alert, and it's exactly on the other orange line, which is completely independent of my alert, but it's the most important point for the whole year. This is where most of the buying and selling happened. How do I know this? It's the volume profile. If you don't know what that is, hit me up. It's worth a shot to learn it. Because it's really what, if I can leave one thing on my chart, if they tell me you cannot use anything, no drawing lines, no nothing, only one thing, I would use volume profile, and that's it. Because I can eyeball the levels, but the volume, I can't eyeball it. All the stuff, I don't know where they happened here. The volume profile will tell me where all this buying and selling occurred. Not in time, but in price. And that's the only thing that matters. If the market thinks that this is the most important part for the whole year, then I should listen. So when they come to it, it's going to be a wall until they go above it. All right, hopefully I piqued your curiosity. I meant to do this a lot shorter, but what the heck? It's pretty important, and it should have been fun. So does this apply to other charts? It sure does. I was going down alphabetically in one of my watch lists, and instead of Apple is a, everybody's seen Apple. This is ABBV. And same concept applies here. Roof, they couldn't take it out. They fall apart. And then they come back to a point of contention, the prior floor that fell apart. They came back to it. They failed on the first attempt, so they had to reset. Unlike Boeing, they were able to set a higher low to try it at it again, and they did. And now it looks like a cup and handle of sorts. They overcame it and perfectly tested it for support. So once the bulls take out a neckline, they come back and say, is it solid floor or is it like a trap door? Nope, solid floor. Let's use it to go up. A little fight here over this ledge, and then off to the races. So does it in the second here, the next one in line in one of my watch lists is AMD. Same deal. They had a failure. They came back to it. Is this a place to start? No. Place to start? No. Place to start? No. I mean, it's tempting, but they didn't close above there. See these tails? They're not closes. The close is up here, down here, up here. So it never closed. It wasn't convincing. And then they came back to it, and then they finally broke through hesitantly, but then off to the races. So is this a place to start long? Heck no, not for me. I call these too high to chase because they're so high so fast. Not that it's not going any higher, but it's not ideal time of entry. It's not an obvious point of entry. And too hot to short. Why would I want to mess with this when it's this healthy? I know somebody upgraded it. So these are the things that I would look at when looking at a chart. Let's say I'm looking to buy AMD for the long term. Do you think I'm going to be able to find a better time to enter than this? I mean, I don't have to be a chart genius to answer yes. There must be a better entry point than that. Up here, somebody thought that it was not going to go down. And guess what? It did. So NVIDIA, speaking of another one, this wasn't an obvious point of entry, yet everybody loved it at 290. Everybody hated it down here, and now they love it again. So there's definite answers to Apple. Great company, beautiful future. If I want to own it for 20 years, I don't care where I buy it. If I want to own it for about a year, I definitely don't want to buy it here, because it's never been more expensive. Well, not never. For the last 5 or 6 years that I've been looking at it, it hasn't been this expensive relative to itself. Not expensive in absolute terms. 23 PE, 24 PE, 5 times sales is not outrageous. But for Apple, it is. Apple is usually under 18 PE and 4 times sales. So this is unusual. So is this an obvious place to start longs in Apple? Probably not. At least it would tell me to not take a full position all at once. Okay, so I do look at charts. Everybody has to look at charts. Even if somebody says, you know what, you should own Apple for the long term, for 2 or 3 years. Okay, why don't I wait a few weeks to see what happens? You know, there's an earnings around the corner. I'm just saying. All right, Nick signing out. Definitely a longer video than I anticipated, but hopefully it was fun.